Hello, everyone, and welcome to Lesson 1. Today, we are going to dive into the hidden structure of markets. If you have ever looked at a price chart and felt completely overwhelmed by the noise, you are not alone. By the end of this lesson, you will start to see that behind what looks like pure chaos, there is actually a highly organized blueprint guiding every single move. Before we unpack the mechanics of the TI system itself, we need to establish a foundational truth. Markets are not random. At first glance, daily price action, green and red candles, and sudden spikes look incredibly chaotic and unpredictable. But in reality, markets follow repeating structures. They are driven by human psychology, fear, greed, and decision making, which creates predictable, geometric patterns over and over again. To understand why these patterns repeat, we look to nature. Think about coastlines, the branches of trees, or ocean waves. If you zoom in on a small branch of a tree, it looks like a miniature version of the entire tree. This is what we call fractal behavior, self-similar patterns that repeat on completely different scales. The exact same principle applies to financial markets. A structural pattern that you identify on a micro 1-minute chart can, and often does, appear identically on a 1 hour or a macro daily chart. Once you recognize the fractal, the time frame no longer confuses you. So, how does this fractal structure actually express itself? It moves in waves. Price never goes up or down in a straight line. It breathes. There are two types of waves that form the foundation of the TI system. First, we have impulsive waves. These are strong, aggressive, directional moves where institutional money pushes the price rapidly. Second, we have corrective waves. These are the pullbacks, breathers, and consolidations that happen after an impulse. Instead of seeing random, disjointed candles on your screen, learning this allows you to see structured, deliberate movement. Recognizing waves is great, but to make a living as a trader, a structure must be tradable and measurable. That is where Fibonacci levels come into play, which we will break down deeply in Lesson 2. Fibonacci levels remove the guesswork. They help us do three critical things: precisely identify where a wave might pull back or retrace, mathematically project where the next major move could go, and define exact entry and exit zones. You are no longer guessing or trading on hope. You are working with measurable historical levels. Now let's talk about the core engine of our strategy: liquidity flip zones. This is where the magic happens and where the market actually transitions or turns. A liquidity flip zone occurs when Fibonacci retracement levels and Fibonacci extension levels collide and cluster together in the exact same price area. When price hits these high confluence zones, market mechanics shift rapidly. Traders on one side of the market aggressively close their positions, while traders on the other side open brand new ones. This creates a massive shift in market pressure, causing the market to transition smoothly from one direction to another. These are your ultimate inflection points. Let's put the entire puzzle together. The TI system is powerful because it doesn't rely on just one indicator. It combines all four elements we just discussed. We use fractal structure to understand patterns across multiple time frames. We use wave analysis to track the immediate market momentum. We overlay Fibonacci levels for mathematical precision. And we identify liquidity shifts for perfect timing. By combining these, you achieve three things. You always know exactly where you are in the broader market life cycle. You can effortlessly locate high probability trade zones, and you can execute your trades with a crystal clear plan. If there is one thing I want you to remember from this lesson, it is this: as traders, Our job is not to predict the future or guess what the market will do next. Instead, you are learning to read the objective structure inside a complex organic system. Once you internalize this structure, the charts completely stop looking random and everything starts making perfect sense. Thank you. And let's get ready for lesson 2, where we map these levels out.